Hey everyone, this is Kirk here again at Option Alpha. So in this video, we're going to be going through a ton of backtesting of 0DTE strategies. Before we even get started, I'm just letting you know really quick, right below this video in the comment box or in the description, I'll put the links to all of these backtests that we run so you have access to them. You can just click on that link, view the backtest for yourself, go through it, run different variations if you want to, and then you can add it back into the comment stream if you want to. But I got a lot of comments and emails and questions about the last video that we did on 0DTE backtesting. One of the things that stuck out was a few people asked, well, what if we just close positions early? Like, what if we close positions an hour before expiration? We didn't actually let positions go all the way through expiration. So what I wanted to do is actually backtest one of those ideas and show you kind of how that works with a couple different variations. So let's just go ahead and start with a new position that we're going to backtest. We'll do SPY, 0DTE. Let's do that same iron condor setup that we had in the last video. So that was our short strikes. We're at about a 30 delta or closest. Our short call strike was at a 30 delta or closest. And then our long put, we were doing it $5. In this case, we're doing it $5 below the short put leg exactly. So that gives us our nice $5 wide spread. And on the call side, we were doing the same thing, just the opposite direction. We were doing $5 above the short call leg or exactly. So that gives us a nice $5 wide iron condor position. For capital, we were doing $5,000 to start in one position size, so not scaling it any different way. And for position entry, we're going to do something a little bit different for this one. So we're going to actually enter this position right after the market opens at 9:35 a.m. Eastern time. So this is going to test, basically let the market open at 9:30, let a little bit of liquidity start to flow into the market, but immediately get into a new position and hold the position until 1 hour before the market closes. So the goal here is don't hold the position all day, try to capture the vast majority of the day itself, but actually close the position an hour before expiration. So we'll skip FOMC. We'll, of course, include some slippage here. That's just good basic stuff we can do at backtesting. And then under exit options, we're not going to do profit taking or stop loss or touch, but we are going to do an expiration exit option, and we're going to close the position 1 hour before the market closes. And of course, we'll include some slippage. And we'll do this one out 3 years, and then we'll go ahead and run that backtest. So while that's running, again, what we're doing here is we're testing the idea. Enter a position early in the morning, 9:35, right after the market opens, hold it all day, and just simply close it an hour before the market closes. So basically about 3:30 in the afternoon. So that would kind of capture that time period where decay starts to, kind of fall a little bit, but it'll be interesting to see what the results are. Okay, and so as you can see now when we got the results in here, this thing did not do very well. So this strategy actually basically tanked and lost all of its money. So it didn't even start well. It kind of actually started sideways, and then it just continued to move downhill from there. So maybe if we ran it for another, just the last year, maybe it would have been a little bit different. But over the last 3 years, it really doesn't look like it had good metrics to begin with. So it got into a lot of positions, well, enough positions before it blew itself up, but the profit factor just wasn't there. The win rate on these strategies, was okay on the actual win rate itself, but it wasn't enough to, there it is, 50%, 48%, your kind of coin flip. It wasn't enough to kind of counterbalance this. So you had too much in here. Average P&L on this thing was about $18 negative. So again, it really just didn't make sense that this thing actually won out. So entering positions early in the day, then closing an hour before expiration doesn't seem to work. We could probably run some different variations on this and say, okay, well, what if we actually close 2 hours before expiration and just added just a different variation? So let's run that, and then let's look at a different strategy for a second. So we're just going to add a variation here. The only thing I'm going to change is close it 2 hours before. Still the same entry, 9:35 in the morning. Maybe just closing it before the end of the day, you capture a little bit more premium. My assumption would be on this one that the strategy P&L goes like this, and it gets a little bit, I have no idea, but I assume it would get maybe a little bit better, but we'll see what happens with that one. So while that one's running, let's go over to this one here. This one is actually a strategy that we had run in the last video, and we looked at it as one of those early versions, which was entering positions around 10:30 and then letting it go all the way to expiration. So you can see this one here. Position time entry is about 10:30 in the morning. We did all of our normal slippage. And then for exit options, it was none. So this is kind of the baseline scenario of let the position run further in the day. And a couple of people had said, well, what if you didn't do that? What if you exited an hour before expiration? So that's what we're going to do here. We're going to create another variation. We're going to go down here. Again, all the same stuff, except the only thing we're going to change on this variation is we're going to actually try entering positions not at 9:30, but now at 10:30 and closing 1 hour before expiration. So again, we're just trying different things to see if any of these different tests, kind of yield any fruit about closing positions early before expiration. Now, what we'll also do is we'll also take the current strategy. This is the one that I use as the basis for then creating the bot that I'm currently running. And we're going to go ahead and use this one, which again was just entering positions at 2:30 in the afternoon on SPX and then letting them go to expiration. By the way, I have been running that bot since I turned it on. It's up a little bit of money. It doesn't really matter now because it's only 15 positions. If you actually look at the back test here, I've certainly expected some point to be underwater for quite some time on this thing because sometimes it just has these underwater periods where it can be underwater for many, many months or go through a drawdown. So I'm not expecting this thing by any means to start off great and then continue from here. If it does, awesome. But my full expectation is that's going to go through a drawdown at some point. But the numbers are kind of tracking with where they should be. And it actually has a position right now that it got into earlier today. You can see it's kind of off center right now since it got into it because I'm recording this video a little bit later in the afternoon. But all it did was get into the position right here at 2:30. And then all I do is just let it go to expiration. So you can see I'm basically running the same strategy, run it to expiration all the way across the board. Just let it get into positions and then let the positions expire, okay? But if there's a way to improve this strategy, of course I'm going to do that. So let's test a way to improve this potentially. Let's go ahead and add a variation here for this one also. We can run all of these at the same time and just come back and check on them at different points. Let's actually go ahead and introduce an exit 1 hour before the close. So exact same strategy in this case. This one's entering positions at 2:30 and then closing 1 hour before expiration. So we'll let that run as well. So coming back here to this one's the strategy that was entered at 9:35. I told you in the beginning of the video, there's going to be a lot of back testing in here. So hopefully you guys are prepared for that. So this one was entered at 9:35. And this new variation B, was exited 2 hours before expiration versus 1 hour. So if you look here, this is 1 hour before expiration. This is 2 hours before expiration. I bet if we did another one in 3 hours, you might get a P&L curve that starts to get a little bit better. That's kind of the idea, is that actually probably not exiting the position early before expiration when you can get that full time decay and that theta decay for these 0DT positions is probably not the best move, right? So getting out of the position too early, you think you're missing the most volatile part of the day, but maybe that's where you get compensated as a trader. Okay, so that's pretty interesting. This one at 10:30. So if you entered a position at 10:30, the strategy still wasn't great. So the baseline A strategy here, it doesn't matter. We're just trying to see if we can improve it, right? The baseline strategy here wasn't great to begin with. We were trying to see if we could flip it. It got worse actually by exiting positions at an hour before expiration. So removing the position an hour before expiration, not even letting it go to expiration, was not the good move in this case. So again, let's just try a different variation here. I don't know. Let's see if we can do something a little bit different here. Let's just say 10 minutes before the market close. So maybe we run it much closer, but not at the close, and see if that does improve it. Maybe there's a lot of haywire stuff that happens kind of the last couple minutes of the market day. Here's a look at this one. Again, this is our 2:30, kind of the main bot that I'm running on this one right now live. And you can see that it got decimated. It got crushed, actually. It was absolutely the bad, wrong decision to close this thing an hour before expiration. So it kind of makes a lot of sense, though, for this one, because you're entering positions at 2:30. You're essentially exiting positions at 3:30. So you're trying to take advantage of potentially some very, very small limited time decay. And that probably didn't work out. So let's add another variation here. Let's just try, and let's do the 10 minutes before market close, see if we get better performance. Maybe just, again, removing the position right before market close ends up being a little bit better. All right, so coming back over here, this one's done. Again, C variation here was 10 minutes before the market close. Actually, kind of interestingly, it didn't perform better, right? So overall, it was still worse. Some periods here, like this period in here, it was actually better and did better performance, but then it just didn't catch up, really. You know what I mean? So if you look at it on the stat basis, some of the stats were a little bit better. So 127 profit factor versus 1.2, slightly better win rate versus the slightly lower win rate here at 58. That's still actually pretty good, win rate across the board. If you go down here to return on risk, this one still edged out. I mean, this is where it probably was the difference maker, is that you probably had a little bit better metrics. Maybe the P&L curve was a little bit easier to kind of stomach across the board. Let's see what those max numbers were. Yeah, your max risk was actually more on this one here. Your max drawdown was more on this one. So that's where that return on risk was just a little bit better here, that it probably ended up working out okay. And honestly, from a management standpoint, it's a lot easier just to let it go to expiration. But very, very interesting to see 10 minutes before. Those 10 minutes, maybe that's where a lot of that premium kind of comes in. So this one's still running here. So let's check on this one here in a second. All right, so you can actually see this one actually did a little bit better when you closed it 10 minutes before. I mean, it was still a losing strategy, but it was actually significantly better if you closed 10 minutes before. So maybe it didn't allow you to, I guess, reap a full negative profit, like negative value on this. If you closed it 10 minutes early, maybe you got out of positions and probably recaptured a little bit of premium that you were going to lose heading into the close, is what I would expect on this thing. So you can see that the numbers are a little bit better. Your win rate was a little bit better. And again, but you're still just kind of slowly leaking capital on this one. It probably wasn't the actual best, move across the board. So, but again, it's very interesting to see how you can test these different kind of exits before close and how they might impact different strategies. So I hope you guys enjoyed this today. Like I said in the beginning of the video, I knew it was going to be a lot of back testing. So there's going to be a lot of stuff in here, but we'll put links to all of those below this video so you can check them out for yourself, run your own variations, add them back in here. If you have any questions, let us know. If you enjoyed the video, please give it a thumbs up, give it a like, subscribe to the channel so you get updates on new videos when they come out. And until next time, happy trading.